Share Shootout, brought to you by Lion of Africa Insurance, insuring South Africa's future.
This is the most vicious stock-picking show on television, your Tuesday night fisticuffs here on Share Shootout. I'm Bruce Whitfield, judge, juror and self-appointed executioner here on Share Shootout, where we occasionally also set people on fire. Now, is it possible to be totally partial? What's the speed of dark? How come you never hear about gruntled employees? Well, we don't have the answers to those really stupid questions, but what we do have is a battle of the wits, and both of our stock pickers are armed to the teeth. We introduce our 2-week champion with 4 appearances, 3 wins and 1 loss. Nick, these glasses aren't for show. They disclose and cover up my baggy eyes because my baby's not sleeping. Norman Smith. What a long name. His challenger has also got a fighting record of 5 appearances, 4 wins and 1 loss. Viv, I've got more wins than you. Govender. Over the next 30 minutes, both of our stock pickers will fight it out for the title of Share Shootout King, and the loser has to fill petrol tanks of the producer's cars. That seems, at their own expense, of course, that seems perfectly fair enough. Both of our guests have pre-picked 3 shares and are keeping them close to their chests. Kind of like poker, because neither knows what the other holds, but at some point during proceedings they must accept at least one of their competitors' stocks, and the longer they leave it, the more likely they are to have to accept something they don't like. Each has got 30 seconds to argue their stock pick, so let's let the Share Shootout begin. Nick, Norman Smith, getting tired of your face, but it's nice to see you, Viv. Good to have you with us this evening. I'm interested in your first pick this evening, because I think you can go first. You've been away for so long. Why don't you, in the next 30 seconds, tell me why you like the very expensive Shoprite Holdings?
Okay, things are expensive usually for a reason. You don't find, quality stocks coming cheap usually. Shoprite's great. It's virtually the Walmart of Africa, and hopefully the Walmart of Africa. They're expanding at about 20 stores per year in Africa. They're going to boost that up according to the latest, things we get from the company. That's doing very well for themselves. I mean, if you look at the rest of Africa, it's growing at 6.5% a year. So Africa is in a bit of trouble at the moment. Yes, supermarket sales are coming down. But like I mentioned, Shoprite is the Walmart of South Africa. That means that when things get a bit tough, people don't shop at Woolies anymore. They shift down. Where do they shift to? Shoprite.
I thought Massmart was the Walmart of South Africa, but hey, call me a liar if you like. All right, here we've got a situation. The thing that interests me about Shoprite is how old is Whitey Basson?
Can't give you the exact activities. His hair is but white as well.
Exactly, he's 60 something. Okay, I mean, he's fighting fit. He's in good humour. He's in rude health. He's got enough money in the bank, however, to go and retire at any point of his choosing. Is there not a risk here to Shoprite?
I think
that with the Christo Visa Whitey Basson magic combo potentially to be broken in 2, 3, 5 years' time, who knows, that Shoprite loses some of that Basson magic?
This isn't Apple. This isn't a company which relies on the genius of its founder to actually make it run and get the brilliant new ideas. Shoprite's ideas aren't brilliant and new. They basically are efficient. And I think a good manager can do something in the operations of Shoprite that the current managers have done. They may not be as smart or as brilliant as Steve Jobs is in Apple, but you don't require that for a company like Shoprite.
I have to disagree with that, Nick. I mean, surely it's a fundamental cause of the turnaround of Shoprite's fortunes that there was that spark of genius. Steve Jobs-like genius in a retail sense. What makes Shoprite more successful than Pick n Pay and Woolworths and Massmart is the power of the individual, isn't it?
Yeah, and management, and they've run it brilliantly. But even if you kept Mr. Basson on, on a multiple that Shoprite is trading on, Ben Graham.
It's only at 30 times.
Yeah, exactly. Buying these quality companies at this price feels very comfortable. But as an investor, you generally, it turns out poorly. I think it was Ben Graham who said that buying blue chip companies at high prices is tantamount to speculation.
But if you'd bought famous brands at $50 and a multiple of 30 times or whatever it was at that stage, if you bought Naspers at $200 at a multiple of 50 times or whatever it was then, or Shoprite at $100 at a multiple of 30 times or whatever it was then, you've doubled, tripled, quadrupled, and 5 times your money many times over. So please don't tell me that.
Absolutely, but investing is an odds game, and history has proven that on the whole, paying these premium multiples, you'll have the odd Shoprite or Naspers story to tell your mates around the bar. But you also had the people who paid too much money for Amplats and Amplats and resource stocks and tech stocks in the early 2000s, 65 times earnings for Microsoft.
But those were
businesses.
Companies that didn't have the fundamentally strong earnings stream of a Shoprite. Surely that is the differentiator. When it comes to paying the super high premium, things are expensive for a reason. That reason is footprint, distribution, technology, and strong leadership.
And also, I mean, don't know the fact that basically it's a company that has a proven track record of doing things well, that's about to expand into a market that's 20 times the size of its current market, you know? So that's something that you must also consider.
You know what? I think you can protest as much as you like. He's going to shoot you down.
Bruce, their operating margins has tripled. It's bringing in competition. We've seen Walmart come in. They've paid big premiums to get into this exciting growth potential. Competition means margin erosion, which means lower profits. So it can be the most wonderful business. If you pay too much for it, you're going to do badly. I'm going to blast this down with a bazooka.
Sure, at close range.
Absolutely.
Okay, so bazookaed, not even shot down. You're in big trouble on that one. All right, Shoprite Holdings been a fantastic business, been a great growth story, but has it seen its best days? Well, that's what Nick Norman-Smith from Lentus Asset Management thinks. Okay, so then you go from one extreme to the other. 30 seconds on what on earth possesses you in your wildest cotton-picking dreams to think that JD Group is a good option. In 30 seconds, please.
JD Group is a business that's in a sector that's under a lot of pressure and has a lot of negative sentiment. It's a retailer, owns a number of different retail stores, big credit retail business. There's clearly risk there, but it's trading on a very, very cheap pricing level. 7 times earnings, 7% dividend yield, and 80% of book. So yes, there are a lot of risks out there. Why would you touch this with a barge pole? Because the business is just too cheap to ignore.
There we go. All right, and with time to spare as well. Okay, your time's up now. Things are expensive for a reason. Things are also cheap for a reason, Viv Govender.
Yes, I mean, if my model is basically South African consumer is under pressure. If the South African consumer is under pressure, he goes to the cheaper option. He goes to the thing that he has to go and buy. Like he has to buy clothing. He has to buy food. He has to buy the essentials. He goes to a place like Shoprite. He does not have to buy furniture. He doesn't have to buy the stuff on credit right now. If you're looking at the market as a whole, what is really going to suffer should the consumer apocalypse come in the next few years, as some signs are coming around right now? It won't be the people like Shoprite, it'll be the people like JD that have the non-essentials on credit kind of goods.
And the thing that scares me, the big clacks and the big red light that comes on in my tiny brain, is that you talk about, the dividend yield of 7%. African Bank used to have a fantastic dividend yield too, and look what happened there, courtesy of furniture.
Exactly, but if you look at the book, the lending book is obviously the key part of the valuation of JD Group. Even if you write off a significant amount of those loans, and if we want to compare it to African Bank, the loan sizes are much smaller and much shorter in JD Group. So if they have made some errors, the downside risk isn't going to be nearly as bad. And they've actually cleaned it up. So in 2009, they centralized their lending. So what I'm saying is the past has been very bad. They've gone through a great turnaround. So it's a much cleaner, much better operation. They haven't taken on the risk that the African banks have taken on.
Viv's looking at you saying, little thinks you're mad. Are you taking his bazooka and firing it straight back?
I think, yes, I would fire the bazooka back.
Okay. We're getting so violent and vicious. I love it. Okay, so Nick Norman-Smith, your JD Group pick, 7.5 billion rand company. It used to be a lot bigger. The market has voted with its feet and is yet to express the same level of confidence that you're expressing, but you're a patient kind of guy. Okay, let's get on to stock pick number 2 this evening. You said Shoprite's not cheap. One that goes cheap from time to time, certainly all of its products go cheap for at least 31 or 32 days of their short lives, is it Rainbow Chickens? 30 seconds as to why you want to go this cheap.
Look, Rainbow Chicken is, of course, like Nick said, in a sector that's been, hammered down recently, the poultry sector. But there has been moves recently by government. The tariffs are going to come into play. The cost of their production is going down because of the fact that last year was a blip on the radar due to weather situations, etc. When it comes to grain prices, I think that also the company is diversifying away from its chicken products. It's going to change its name. It's going to have a more widely distributed, a bigger distribution of products. It's going to give out here. It's not going to be as sensitive as the chicken market is to upsells.
It's buying Food Corp, a big chunk of Food Corp.
Except the fish.
Except the fish business, but that's good.
Yeah.
Because you think chickens are hard, fish are slippery and harder to find, frankly. At least you know where the chickens are. Give me a sense, though, of how they compete in an environment which is hurting Astral heavily, where you get chickens cheap coming from places like Brazil.
Yes, but I think Rainbow has a bit more diversification. It basically is able to to tap into a number of different areas. In addition, it has a better margin because its products are a bit more, there aren't too much commodities. There is a bit of a brand name coming with Rainbow Chicken as opposed to Astral. I think that's also going to help it out. It's going to expand to Africa. It's got in Africa the kind of conditions are a bit different from South Africa, in which the inputs are subsidized. Often you have grain subsidized, often you have soya subsidized. That's going to be a bit better. Demand's going to grow in those parts of the world. People love chicken in Africa, and it's going to be a market in which demand's going to just skyrocket over the next few years.
You've got no choice but to shoot this down, Nick, because it's on a higher multiple than Shoprite.
It is, but that's a seriously depressed multiple as opposed to Shoprite, which is on a peak multiple. So the chicken industry is highly cyclical. So it wouldn't be my pick in the chicken sector. I think there's a bit of froth built in because people like the African story and the food court acquisition, and they're probably paying too much for it because these are prized assets to be moving up into Africa. But again, in terms of the way this game works, if Shoprite was the first one, I'm very scared that I get another frothy multiple. So I think we're in a tough time in the cycle for chicken producers, and therefore I think it's a reasonable time to be buying when
okay, so despite the fact that it's trading on a multiple of 42 times, you talk about a depressed multiple. What do you mean by that? Earnings are being depressed by
exactly.
the cycle.
So what you need to look at is what are the sustainable level of earnings that Rainbow can generate. Now, given the pressure that the industry's been on, those earnings are under a bit of pressure versus Shoprite, which just chunks out record earnings, and the market's saying, well, they're going to beat that record. All we're saying is things will normalize and Rainbow will carry on as is. And when the chicken industry turns, actually that 40 multiple becomes a little bit less.
Okay, but when does the cycle turn? And that's the big question. But what's your time frame on this?
Yeah, look, I think probably in the next year or so we can have an immediate impact by the fact that grain prices are coming down. We also have the new acquisition that's going to probably have an impact over the next year as well. So I think we are looking at 5 or 10 years down the line.
I wonder, you go to the Sanson Food Court at between 12 and 2 o'clock on any given weekday. Look at where the queues are longest. They're longest at KFC. KFC is coining it. And I'm just surprised that the producers aren't able to capitalize on that same sort of ethos that people are prepared to express when it comes to buying fast food. You're accepting it?
I am. Not very excitingly, but not too willingly, but no, I'll accept
I think you might be quite pleased with that decision. Nick, I'm not very easily pleased. Norman Smith accepting reluctantly Rainbow Chicken, but his argument is an interesting one, and goes back to his long-term philosophy, which is you buy companies that are under a huge amount of pressure. You sit back, you get patient, and then you pray a lot. Okay. Whew. You do go to church a lot. In the next 30 seconds, let's have a guess. Afrox, why?
Afrox, it's the largest gas supplier in the country, so they provide the LPG gas that you use in your heaters at home, as well as a lot of industrial gases to hospitals, the car manufacturers, and various other industries. So relatively diverse. You gear it a lot to South African industry. And the great thing about the business is there's very high barriers to entry. Regulatory, it's very, very difficult to get in because of all the approvals that you need to supply to medical and they make gas for Coca-Cola, etc. So very high barriers to entry, and the distribution system is very difficult to replicate. That means you can have high margins.
But it's a horrible investment, Viv.
Maybe not quite. I think I'll follow Nick's philosophy and save by or take by punishment here. So I think I would go for Afrox here. As you mentioned, the South African industrial complex requires this for it to produce, and I do think that if you look at South Africa's different sectors, the industrials have been doing the best by far over the last few years. The financials have been under pressure, the resources have really been under pressure. I do think if we have something that's going to be tapping into South Africa's industry that possibly has the ability to expand outside, I don't think it's going to be a bad investment going forward. It may not be spectacular, but it won't be bad.
Do you pay attention to the PMI numbers, Purchasing Managers Index, which gives you an indication of expansion within industry, within manufacturing? Because PMI numbers are looking positive, not only here, but globally as well. Afrox would theoretically benefit from an improvement in the sentiment of purchasing managers.
Look, you can't ignore it, but we certainly don't make investments decisions based on predicting where that's going to go. We just say, look, where is this business priced? Now, on a PE multiple, it looks quite expensive. Again, it's been under a bit of pressure, and earnings are a little bit depressed. They're making some big investments. But if you look at the underlying asset value and the multiple of that, we think there's a lot of value that will get pulled out of it.
And you notice how strategically he's playing this, because he says, oh, your multiple on Shoprite is awful, but your multiple on Rainbow isn't so bad because it's a cyclical issue. Because you buying into a company that's got a multiple of 23 times. On
But
the same basis
but it's
as
only
Rainbow,
around 2 times book. So,
Okay.
and those assets we think can generate premium returns on equity based on the assets that I'm
but
talking
we
about.
perpetually seem to be suffering gas shortages. Afrox often, in about August to September, oh, terribly sorry that you're cold, there isn't any gas left. Have they got pricing power, or is that a regulated?
Yeah, that's quite regulated, which obviously that hurts your pricing power, but it also stops too many competitors coming in. That's only around 25% of their business. So the industrial gases is where it really is, and they're actually building a couple of new plants in Durban and the Eastern Cape as well. So they're expanding their footprint, and as you build that capacity and that distribution capacity, you get those economies of scale, and you can plug in new businesses for much less than the first business that you plugged in. So
is he sniffing happy gas, or should we give him sarin? I wonder. You're accepting this?
I'm accepting this.
You're accepting that one. Okay. I think you're going to be relieved as well. So you come to this part of the program where we need to pause, reflect just a little bit, and assess just how badly our competitors have done this evening. Nick Norman-Smith from Lentus Asset Management going to the brink and picking JD Group and Afrox, two companies massively out of favour on the JSE. JD Group trading at a multiple of only 7 times. It's cheap for a reason, and that is that the market doesn't have the same faith as Nick that JD Group has got what it takes to recover really strongly. And then Afrox, of course, trading on a huge multiple. Nick Norman-Smith says that's because the gas business is in a bizarre cycle, I think you said roughly. Anyway, I might be mixing my metaphors and confusing my shares, but that's okay, because I am the judge, jury and executioner. Shoprite Holdings, market cap of 105 billion rand. Viv Govender can't get enough Shoprite. Nick Norman-Smith took out the blunderbuss this evening and just blew it away. And Rainbow Chicken, Nick playing a strategic game because he doesn't know what is next on Viv's list. Viv doesn't know what's next on Nick's list, and nor do you. I do, and I'll be sharing that with you in just a few moments.